Hey, thank you for joining back in with us at Building Blocks for Apartment Investing. Today, we're going to discuss topics such as the multifamily outlook for 2023. Some of the information that I was able to come across, like on the report from Marcus and Millchap, was saying that this is going to be a prime opportunity for multifamily investing. What are your thoughts on that?
Yeah, well, personally, there's going to be opportunity for those that are well capitalized in the market because you have to go back to 2020 and 2021 when a lot of operators they took out the loans and they were bridge loans where they had, you know, 12 months, 24 months IO. And now, those are coming due now. And so a lot of those operators are now they cannot, with the current interest rates, right? They may have went in with, say, an interest rate of, let's say, 4%, right? Let's say
Mhm.
5% on a bridge loan, maybe even up to 5. And now they want to refi out, right? The point is to go in, stabilize your property, and refi into a lower interest rates. But now that we're, interest rates now are hovering somewhere around 5.56%, a lot of them will not be able to refi out of those loans now. So then what happens is that those bridge lenders are going to start either one, taking over the loans or take the property back, or two, the lenders, the sellers are going to have to like offload somewhat at a fire sale. So it's unfortunate that some operators, because no one really saw this company coming,
Mhm.
where the Fed was going to have to continuously over the year of 2022 bump up interest rates at point 75 bips 3 times. No one saw that coming.
Mhm.
And so far in 2023, they bumped it up. I think the number is 25 bips, and they expect another uh, 2 more times of 25 bips bump in the interest rates. And that being said, no one's going to be able to really refi out.
Yeah, I remember
Yeah.
when we had the assistant vice president at Bank Financial. I actually asked him if there does he expect blood in the streets. It
Yeah.
could start getting, to the point where they have to really deeply discount some of the properties that they have. Like even one of the ones that we were looking at that we were underwriting, they were asking for, twice as much what the property should be worth, but I think they were just fishing, but they're going to have to come down to what the property is actually producing in income. That NOI is going to determine what that price should be for that property. Um,
Absolutely.
I ended up coming across an article. It was saying brace for a crash landing as the US economy barrels toward a recession. So at this point, there's going to be a lot of people that won't be able to afford buying a house. They won't be able to afford these things. They're going to have to look into multifamily properties. They're going to have to look into these apartment buildings.
Yeah,
Dan,
absolutely.
what are your thoughts?
Yeah, I mean, my take on it is simply this. I mean, I'm one of those folks that is in multifamily. I'm currently renting right now. So I am that prime example where it's like, hey, the money that I did have saved up to go towards into, purchasing a home is now just being continuously stacked up or used for other purposes. And even to Sed's point, you're going to have a lot of brand new investors that are coming in that it's like, okay, I do have some money in the bank that I'm able to put out um, into maybe a new investment deal. But because of these bips and the interest rates, they're going to need to back out and they're going to try to capitalize, kind of like the deal that we're looking at. They're selling on pro forma, and it's not so much that it's not right. We get it. We understand that it's like, hey, this opportunity is going to get to where you wanted to be at. And it's like, well, hey, we need to base it off the current market right now and the current rates. So, um, as far as it being a crash landing, I think folks just need to be prepared for those life rafts when that does occur, because there's still opportunity out there. And for that deal that was worth that 1.5 million is now worth a million. And now you have those investors who have been steady, who have seen recessions, gone through 08, 09, survived that impact, are now able to come in and capitalize that. And that's where we come into play, where we can partner with that to make things happen.
Yeah, I definitely second that. And the winners in this current market will be, like I said, those that are well capitalized, those people who have been able to find investors, and especially now, take for instance the things that has recently happened. We had two banks to fail in this past week. Okay, so now investors are running scared. Investors are running scared because they're not sure what's going to happen in, say, the stock market. Okay. So they're looking for places to place their money that are secure. And what more secure of a place to park your money than on hard asset, as in commercial multifamily? That building is going to be there. It's not like crypto or things that are in the stock market and I'm not bashing the stock market at all, but at the same time, people want things that's tangible. And right now, buildings are tangible. You can go see it, feel it, touch it. It's going to be there. And the one thing that over time, real estate has always increased in value. There are times, yes, you look back to 2008, where, there was a minor blip, not minor, but not a major either, but there was a blip where you had about 4 years or so where you were not sure about what was going to happen in the real estate environment, but it was more so single family that took the beating back then.
Yeah.
Multifamily has been recession resistant, because of the fact when single family goes through their hard times, people still got to have a place to stay. Okay. People still got to have a place to stay. And if I can't pay my 2,000 a month mortgage, well, let me just downsize a little bit until I can get things corrected on my end. And let me go down here and pay this $1,250 or $1,400 apartment, rental, this lease for, whatever amount of time that I need in order to get myself straightened back out. So, and, a lot of people, as you mentioned, will talk about blood in the street. I'm a very positive person. I'm a very positive thinker. And I really kind of don't like that term, blood in the street, because blood in the street means a lot of people are getting slaughtered. And, with me being in the industry, being in the business, I just don't want to see any of my fellow investors, owners get hurt. However, none of us saw this coming. None of us saw it coming. And I remember even back in 2020 and 2021, when I was doing my underwriting, I still underwrote conservatively, meaning rental increases of 3%, expense increases of 2%. And now some of the things I'm hearing to be conservative now is basically saying no, for year one, no rental increase. And even if you were doing that, where you were being very conservative in 2020, 2021, no one saw that, like I said, the increase in interest rates to what they are, because everybody just really and truly thought that you'd be able to finance, refi out and move on after you've done the stabilization of your asset.
Yeah,
Absolutely.
a lot of people thought that the party was just going to continue on forever. This was just the strongest economy and it's never going to have a correction. Here's another article that I came across. It says that it's talking about how rising interest rates are actually the thing that paved the way for the Silicon Valley bank collapse, because they were so heavily invested in bonds so that way they could try to stay afloat. But as soon as the Fed started raising those interest rates, those bonds started becoming worthless. So they didn't actually have the money to be able to cover what they needed to. A lot of people are going to start to realize that the stock market isn't the place to be. You know, everything was going so well for the last few years. The economy just kept moving forward. However, right now we're going through this correction, and people are pulling their money out of banks left and right, which is causing the bank failures. People are looking at the stock market. They're like, all right, let me pull this one out, because there was something else that I read that they were thinking it will be a 25% correction within the stock market. And if that's the case, as you said, Cedric, everybody's going to want to have something where it's more stable, something where it's a hard asset, such as multifamily. So yes, this will definitely be the best time to start having everything set up. And to circle back to what Dan was saying, they can come to partner with us. If they aren't in position right now with the connections, with the lenders in place, with some private money, if they don't have their connections with the other investors in place, or with these brokers that are actually having these off-market deals, you know, if they don't have these things in place, they can come to Building Blocks, so that way we can help them. We can see where we might be able to partner with them, or which direction we may be able to go with it.
And really the biggest thing Willin said is the outlook. You know, folks need to realize that multifamily is not that short term. It's not the stock market. It's not crypto, where it's like, hey, you know, back when AMC had that crazy, bubble increase, and it's like everybody's like, oh, let me get some money out of there. You have to look at the outlook from 10 years from now. We were just talking about it this morning because the news feed came up, but T-Mobile just purchased Mint Mobile, which was owned by, currently owned by and ran by Ryan Reynolds. And it's like, okay, well, if folks are making moves, that means, okay, more employees, that's more growth, during these quote unquote economic and recession times. So there, you need to find those tangible assets, and the biggest tangible asset is multifamily. And for those that are currently living, and I was thinking about this even for myself, those who are currently living in an apartment complex, or even know somebody that's in an apartment complex, take a look around and observe how many folks have kids, especially in their teenage years. Because what's going to happen is that these kids are going to get older. And, if their parents or guardians or even grandparents, have a steady income where their rent is being paid for, their mentality is already shifting to, oh, I'm going to need a rent, or I'm going to need to find a place to live, once I become of age. My first place wasn't, looking at a house. I was looking at an apartment. So you have to understand that, hey, if folks don't have the mentality now where they're being taught, at the age of 12, 13, or in their teen years, that, hey, you're going to need to buy a house, or you're going to need to look for your house once you're done high school, once you're done college, what have you, once you find that good job, their mentality is going to be shifting towards looking for an apartment. So with that multifamily, especially when you got these apartments with, 3 to 4 kids, or even 2 to 3 kids, it's like, hey, those children that are in there right now are going to need a place to live. So have that outlook where it's like, okay, is my stocks going to make me money in 10 years? Or, the kids that I'm seeing running around here in this apartment complex going to make me money? Because there are jobs that can pay for that 1,200, 1,450 a month rent, as said so put it. So folks just need to, have a discussion with us, partner with us, and speak to us, saying like, hey, what's your outlook? What do you foresee? But it needs to be tangible. No matter what, it needs to be a tangible asset. If you want to put some money to the side, crypto, hey, that's fine. But a bulk of your money shouldn't be in something that you can't see or something that you can't grab.
Yeah, if you're investing, honestly, you have to understand that it's investing it's a marathon, not a sprint. And that's what we do here in commercial multifamily, is that our outlook horizon, when we purchase an asset, it's 5 to 7 year horizon, and sometimes even 10 years. But you invest, you're investing in a tangible asset, and also you're investing with proven operators, people who have done this before, some people who even went through recessions for that matter, and they know how to operate within this type of economic environment. And these are just some of the things that you as an investor should want to contemplate. Again, you want to look at the track record of the people that you are investing with. And that's one of the things that we value here at Building Blocks for Apartment Investing, is teaming up with proven operators, people who have been in the business long enough, seen the ups and downs, and that also one of the key points is that they're very conservative, very conservative in their underwriting, and that we know that we can carry out the business plan for that acquisition.
I just came across an article. It says Sharon Stone says that she lost half of her money due to bank failure. Right? A lot of people are sitting up here like, all right, as long as my money is in the bank, I'm just going to keep on saving money. But you have to have that money making money for you. You have to put that money to work. If
It's
you
a
have it
tool.
just sitting there with a very low percent, I'm not sure what the percentage that banks are giving back on their savings right now. I'll end up looking that up.
0.00009%.
Yeah. Yeah. But instead of receiving such a low return on their money, they can receive something so much higher, with a hard asset such as multifamily. So I think a lot of people should and will be looking towards multifamily towards the end of the year.
Yeah,
Absolutely.
yeah, they'll definitely be the way that I envision it is definitely looking into real estate as a place to definitely park their money, um, you know, regardless of what asset class it is. Definitely look into real estate as being one of those vehicles to help their money grow. And I definitely agree with you, Will, on that. Multifamily definitely is one of those asset classes to where they will park their money. One of the things is the consumer price index, right? The consumer price index right now is around 6%. One thing you have to look at is the highest percentage rate that I've seen people's income grow, right, is 3.1%. Consumer price index is running at 6. So you're already running a deficit, right, in the amount of money that you actually have to spend. The inflation rate, consumer price index basically runs about the same, that's the same thing. So if Cedric got a 3.1% interest pay increase this year, and inflation is already at 6,
Still
I'm
playing
already
catch up.
losing. Right, I'm already
Mhm.
losing. And so again, having your money in banks, yes. Do I have money in banks? Yes, I do. Of course I do. Because you have to be liquid in some form. But you really want to limit what you have in there and use those funds to invest in hard assets. That way you can at least stay on par or greater, if you will, than what inflation is currently going. Because a lot of for multifamily anyway, you're looking at cash on cash somewhere between 6 to 8%. That's what most operators are delving out right now for their new opportunities. So, as we all know, cash on cash is the money that you invest, and it's the return that you will get on quote unquote a yearly basis. And so that's what you as an investor would want to look for, is someone that's giving you at a minimum of 6 to 8% cash on cash. And that's quite typical right now. And at least you can say, if you get one that's 6%, I'm not losing money. I'm not losing money. I'm staying on par with at least where inflation is at. Where if you're, parking your money in the bank, you're losing money because, your dollar's just being
Eroded ever since.
eroded. Thank
Yeah,
you.
eroded away.
Eroded by the inflation rate. So yeah, that's where we're at, unfortunately. No one saw it coming, and hopefully, prayerfully, as I always like to say, that the economy will, this won't be long and sustained, and that things will correct in the very near term, and we can get back, and the interest rates can start to come down, and we can start having that robust economy as we had since probably 2012 up until about 2021.
I think that we have gone over a good amount of information here. What do you guys think?